If you are an investor, entrepreneur, shareholder, or part of senior management in a company, you need to know that you are a user of financial statements and need to understand and be able to interpret them. You cannot use the excuse that you are in sales, marketing, or on the technical side and don't need to have a basic understanding of financial statements. As a user of financial statements, you will be exposed to two types of statements, one being your monthly management accounts, and the other would be your annual financial statements, which are prepared on an annual basis. You need to understand what statements you would find in the financials of a company and the figures that would be included in those statements.
The balance sheet is a statement that reflects all of a company's assets and all of a company's liabilities. And that is basically what we're saying the company owns and what the company owes. The balance between the two is what we call owner's equity or owner's capital, and that is simply what we're saying will be left should a company decide to dispose of its asset and settle all of its liabilities. Included in the financials is also a statement called the income statement, and this is what basically shows us how much sales the company generated throughout the year and any other income that the company would have received in that particular year. We also have what we call cost of sales, which is basically the cost that the company incurred to generate the sale. The net effect between sales and cost of sales is what we call gross margin or gross profit. We also have a section that reflects all the expenses incurred by the company, including all the taxes. The net effect between your gross profit less your expenses and taxes is what we're saying is left over for the company after taxes. And lastly, we have one most important statement, and that's the statement of cash flow. This is the statement that we're saying tells us how much cash was generated by the company, how it was generated, and how it's being utilized. Normally, the financials are prepared once a year, but because of the importance of this statement, I think we need to try and prepare the statement as often as possible, because this is really the statement that gives us a clear, real picture of how we're doing financially throughout the year.
Also included as part of the financial statements are the notes to the financial statements. This includes the accounting policies of the company and, in addition, specific notes which are referred back to the balance sheet, income statement and cash flow of the company and explain the balances that are reflected in these statements. There's also detailed disclosure as required by the accounting standards, which includes things such as depreciation, directors' emoluments, and related party transactions. It should be noted that financial statements are prepared in terms of international financial reporting standards, and some of those adjustments that get put through by companies are fairly complex. So my suggestion is that if you don't fully understand the figures, that you then refer to your financial director or your auditors to obtain clarity.